In the meantime, China is gearing up for its most important annual political meetings, known as the Two Sessions. Premier Li Qiang will be delivering his first work report after a year in office. Minmin walks us through the key economic points to look out for at the annual meeting that starts next week.
At least 5 of China's top urban economies had set their GDP growth targets at above 5% during the local versions of the Two Sessions, leading analysts to speculate that the central government would set a target of around 5% at the national level. A tall order, analysts said, given the relatively high base of 5.2% growth in 2023.
I think the target should be set around 4.5% instead of the 5% that many people had hoped for. Because if we set a higher than 4.5% target, that means the economy needs a much bigger boost, especially in the housing market. But the fundamentals in China is relatively weak at this point. Blowing up the housing bubble is not in the government or the individual's best interest. So a lower target is more realistic.
The annual GDP growth number is closely watched as the effect of a more demanding target will cascade down to other aspects of policymaking.
Anything around or higher than 5% means China will continue to implement pro-growth fiscal policies, and anything that below 5% means China will focus more on innovation and transition to a more sustainable green economy.
Amid a challenging outlook, including a sluggish property sector, some economists expect China to set a higher budget deficit this year of around 3.5%, up from 3% last year. Latest data show home sales by 24 major developers, traditionally a key growth driver, tumbled by more than 40% this January.
The housing market has been the biggest drag for China's economic recovery, and it will continue to be. And as time goes by, the housing sector will also become a big burden for smaller regional banks. They are highly exposed to not just the local government debt, but also the loans to real estate developers. So I think more measures have to come out to stabilize the expectation in housing market, at least to have a clearer expectation on how much further the housing prices can fall.
Even though major indicators, including consumer spending, have rebounded from the slump during the COVID pandemic, they have yet to fully return to pre-pandemic levels.
就疫情来说稍微好一点，但是远远可能说没有疫情前那么好了。
Over the Chinese New Year holiday, while travel and spending has exceeded pre-pandemic levels, per-trip spending still dropped around 9% compared to 2019.
Consumer confidence index released by the National Bureau of Statistics, which has been staying below 100, means people feel a bit of worried about their future incomes, future jobs, and future economic growth. So that's, I think, it's the top priority for the government to revive and to ensure continued recovery in consumer confidence.
Another closely watched number is the government's job creation target.
I would watch very closely on any new programs or measures to stabilize the job market, because this is probably the most difficult year for young people when it comes to their job market perspective. And also for low-skilled workers, the job quality has deteriorated. The working hours has been significantly longer as time goes by, and the average wage growth has declined quite significantly.
Officials said that in December, the unemployment rates for Chinese youths aged 16 to 24 and those between 25 and 29 stood at around 15% and 6% respectively, higher than the nationwide jobless rate of 5.1%. Some 84 million people are currently engaged in what officials call new forms of employment, such as delivery workers and online ride-hailing drivers. The government last month issued new regulations to beef up protection for them. Minmin, CNA, Shanghai.